Equity Group posted 34.4 billion shillings profit after tax in the 9 months ending September this year. This was a 28% growth over a similar period last year. Releasing the results at the head office in Nairobi, the Group Managing Director and CEO Dr. James Mwangi attributed the improved performance to intentional strategic decisions and quality income mix.
Equity registers a profit before tax of 44.3 billion shillings, a profit after tax of 34.4 billion shillings, a 28% growth in profit, earnings per share growing at 27% and positioning the shareholders well.
In the period, customer deposits grew by 15% to over 1 trillion shillings, making Equity the first bank in Eastern Central Africa to cross the milestone.
If you take that daily growth rate of 330 million shillings, then the second trillion will appear in less than 5 years. So we have 21% growth in loans, while there's only 1% growth in government investment. So we have gone back to the market. We want to stimulate the market, and we shall see ourselves significantly removing the money that was parked in government stocks to the market. Reallocate 400 billion shillings in government stock and 200 billion in cash into the productive economy.
Dr. Mwangi said the group's post-COVID recovery strategy has proved sound.
The 171 billion we had rescheduled under COVID, 50 billion has now been fully paid out of 71. 105 is fully resumed, and out of the entire loan book, only 9.5 billion is trained, and that is fully provided for. Loans are growing faster than deposits, suggesting we are now growing back from where we had placed money during COVID.
In the period, loans grew by 21% to reach 673.9 billion shillings. The group focused on growing non-funded income in a challenging operating environment occasioned by the COVID-19 crisis and the Russia-Ukraine war.
An economic turbulence because of inflation, because of the war between Russia and Ukraine that has really affected supply chain of energy, specifically gas, and agricultural output, and as a result disrupting economic stability in terms of global demand and supply.
Non-funded income increased significantly, raising its contribution to total income to 41%.
The non-funded income, as we can see, grew by that 1%. It grew faster than loan interest income and even gross interest income. We have created new streams of income. This is not a one-off. This is the new norm. Trade finance is the biggest driver of non-funded income. The bank is of age. It's now sophisticated and complex to use financial tools of trade finance to support the whole region. Why? Because we are focused on cross-border trade.
A pursuit of regional diversification saw subsidiaries enhance their significance.
Deposits, the subsidiaries are contributing 44%, loans 37%, assets 42%, revenue 43%. Despite being young now, the subsidiaries are contributing 35% of the profit of the group. Equity BCDC is the fastest growing subsidiary. We are now a systemic institution in the entire region. The number one bank in Kenya, number one bank in DRC, number two bank in Rwanda, and number 5 bank in Uganda.
Equity adopted a strategy to build resilience and agility to handle future shocks. It launched the Africa Recovery and Resilience Plan to stimulate the region's markets and promote trade.
The African Recovery and Resilience Plan speaks to stimulating the market, leading to 6 sectors. It's our new strategy. We became resilient. Can we sell that resilience to the marketplace so as to catalyze and to orchestrate our transformation with those sectors and to enable the working capital?
Digital banking continued to be the largest driver of transaction numbers, with a notable 964 million transactions recorded.
We have delivered ease, we have delivered convenience and to the customers, and we can now see how the movement is. So the value of those digital transactions, as we can see, is nearly 7 trillion. And that only compares to 3 trillion of what is on the brick and mortar. The channel of choice of payment is now pay with equity.
Dr. Mwangi said Equity is celebrated every year as the bank with the lowest charges, making it the bank of choice for over 17.5 million customers.
Equity doesn't make money because of high interest rates or high charges. For 12 years, we have won the award of the bank with the lowest charges in the market. 12 consecutive years. Here is the evidence that interest rate has been lower than where inflation is. And that then confirms the equity model. High volume, low margin. You bring affordability.
The CEO highlighted the operations of Equity Group Foundation, which runs several programs, including health, agriculture, education, and energy.